Welcome back. So the equity market has managed to recover from the opening cuts. Let's figure out what's happening in the world of commodities. We have Manisha joining in with the latest. Manisha.
Well, thank you for that, Surbhi. I'm looking at the gold prices because we're trading yet again to very close to all-time highs of $29.40 an ounce. Well, there is tariff uncertainty, which has continued to drive safe haven buying in case of gold. Add to that the geopolitics and the way that we've seen global central banks continue to buy gold. Actually, global central banks have been net buyers in the last 15 years when it comes to gold prices. And then the investment demand also has been on the stronger side. When you look at the price increases, well, gold has been gaining for 7 straight weeks. Now, that is a chart that tells you on what we've done in sense of prices. So after 28% of gains in the previous year, we are up by 12% in gold prices for 2025 as well, clearly outperforming various other asset classes. Also, when you look at the kind of gold buying that has been happening in US has been quite strong. We do understand that a lot of banks had gotten shut there and they're buying gold from various global markets to give delivery onto the COMEX exchange there. So that really tells you on what the US markets have done. 5th of November, that is when the US President Trump was chosen. So we know that date, 532 tons, is what US was holding in sense of gold in its inventories at that point in time. By the end of December, this had gone up to 681 by the end of January, and that is where the tariff conversation was pretty high. We saw the gold holdings on COMEX gain up to 1,000 tons, so double off where we were on 5th of November. And then by 14th of Feb, that's the latest data that I have, we've gained up to 1,164 tons, and the markets do believe that by the time it's end of Feb, you could be looking at 1,200 tons in sense of gold holdings in case of COMEX there. I want to put out another chart that tells you the kind of imports that we've seen from Switzerland, that is the biggest exporter in sense of gold, on how those numbers have moved. Now, as you can see, we've seen Chinese and Indian numbers continue to decline for the month of December. But when you look at the US numbers, that's a big jump that you've seen. And that would tell you on what we've seen in sense of December. January numbers are expected to be on the stronger side as well. This is the kind of imports that we've seen from Switzerland, as you can see, last year to this year. And that number, while has declined in India and China, as you can see, the US numbers have been much on the higher side. This is a move when it comes to gold from futures to physical. UBS, HSBC, JP Morgan, all of them actually have been getting in gold into US, and those numbers clearly tell a story there. I also want to take you through on what Goldman Sachs has said in a report that came in yesterday. They're talking about 2 scenarios, and both of them, by the way, are bullish. Goldman Sachs says that they expect the gold prices to go to $3,100 an ounce, and this is on the back of ETF buying and central bank holdings as well. But they also think that the prices can go much higher, up to $33 an ounce as well, if the policy uncertainty and tariffs persist. But here, I also want to show you on what Capital Economics, as a report has put out. They believe that the prices will go to 3,000, but they also expect the prices to decline all the way to 2,750 by the time it's 2025 closing curtain. So clearly, very volatile gold prices going forward. But at this point in time, this is the best Trump trade that you've seen in 2025 till time.
All right, Manisha, thank you very much for that.